All right, for this video, I want to go over with you what types of expenses can be deducted as a medical expense on your tax return. So you can see in the title of the video, the question being posed today is, can you install a swimming pool at your home and try to write it off on your taxes as a medical expense, right? So I saw a video recently where somebody online was claiming that they helped get their client a $80,000 deduction for their swimming pool because they had it installed under the pretense that it was for medical purposes. So, like anything else online that you see that sounds too good to be true, a lot of times it is. So that type of statement, that type of tax advice isn't completely wrong, but it's leaving out a lot of fine print. And so that's what we're going to go through today. I've got two slides. We're going to go through the first slide, which covers the rules. And then on slide 2, we have our swimming pool example. So anytime we're talking about deductible medical expenses, we're starting with Section 213 of the Internal Revenue Code. Right, so if you're an individual taxpayer, those shall be allowed as a deduction expenses paid during the year that have not been reimbursed, right? So insurance hasn't covered it. Expenses for medical care for you, your spouse, and any dependents. Now, what's important here is in order to deduct any medical expenses, the total costs have to exceed that floor amount, right? The floor is 7.5% of your AGI. So in other words, if you're not going to itemize tax deductions, or if your AGI is too high or your medical expenses not high enough, a lot of times you never get a write-off of medical expenses. So if we look at the example here, we have John. He's a single filing taxpayer, and his AGI, that's his adjusted gross income, is $100,000. So in order for him to deduct any medical expenses, he's got to have at least $7,500 in unreimbursed medical expenses during the year to even start to see some sort of tax write-off or benefit for the expenses. So if, for example, his medical expenses were $8,100, the amount that he can deduct as an itemized deduction is only $600, right? Because it's the total expenses unreimbursed minus the 7.5% floor, so that's the $600 amount. If, on the other hand, his expenses were only $7,000, I mean, it's still a lot of money, right? I say only, but if it was just $7,000, he gets no deduction now, right? Because he did not meet the 7.5% AGI floor. Okay, so now we got the background here. Let's get into what is a medical expense and how does this work for capital improvements. So under 213D1, the term medical care includes amounts paid for the diagnosis, cure, mitigation, treatment, or prevention of a disease or for the purpose of affecting any structure or function of the body. Okay. Now, if you look at Section 213D, there's a couple other items in there like health insurance premiums for self-employed persons and things like that. But in this case, we're just looking with the first definition. So what is medical care broadly, right? Now, where do we talk about capital improvements? Well, capital improvements, this section is found in the Treasury Regs, right? So if we go to Treasury Regs section 1.213-1E13, that's where we're going to find some guidance on capital expenditures related to medical care. So a capital expenditure is an improvement, so a permanent improvement to a property or a structure, right? So it's not just paying somebody like a doctor for their services to perform medical care. You're spending money to either purchase an actual piece of tangible or real property or make improvements there too. Now, because it's a permanent improvement, capital expenditures are generally not deductible, right? So if you make an improvement to your house, there's no tax write-off. It just adds to your basis, and then when you sell it, you have an increased basis amount. So if we look at this paragraph, so all of these paragraphs I have here, which we're going to go through, this is taken exactly from the Treasury Reg. And this is so on point, and I think it's worth reading all of it, even though it sounds lengthy here. So for purposes of Section 213 and this paragraph, so we're talking about this, Treasury Reg 213-1E13. For purposes of Section 213, a capital expenditure made by the taxpayer may qualify as a medical expense if it has as its primary purpose the medical care of the taxpayer, his spouse, or dependent. Okay, so first thing here, it's got to be the primary purpose for medical reasons, right? If you want to install a pool, and let's say 1% of the motivation there is for medical reasons, and then 99% is, well, I want a swimming pool, right? My kids are going to love it. I'm going to love it. I'm going to lounge out there all day on the weekend. That is arguably not the primary purpose, right? The primary purpose of the pool was for personal and recreational reasons. It wasn't medical care. So this is the first issue that a lot of taxpayers are confronted with when they try to do stuff like this, is when the IRS asks you, okay, well, show me some evidence of your intent here and why the primary purpose is medical care. They often can't do that. So second piece here. So if we're in the same paragraph, right? So you can Google this and read it for yourself, but I've got it copied and pasted here in section. So moreover, a capital expenditure for permanent improvement or betterment of property, which would not ordinarily be for the purpose of medical care, may nevertheless qualify as a medical expense to the extent that the expenditure exceeds the increase in value of the related property. Okay, so this is very, very important. This goes back to the amount that you're going to be able to deduct. Okay, notice what it says here. The amount that's going to qualify as a medical expense to the extent the cost, so the expenditure exceeds the increase in the value of the related property. So here's an example, and this is again within the paragraph. It says such a situation could arise, for example, where a taxpayer is advised by a physician to install an elevator in their home, right, so that the taxpayer's wife, who is afflicted with heart disease, will not be required to climb stairs. If the cost of installing the elevator is $1,000 and the increase in value of the residence, right, so you made an improvement to your property, you spent money, but the value of your home increased as well. If the increase in value was $700, the difference of $300, that is the piece that you can deduct as a medical expense. Okay, it's not the whole thing. And that's where I think a lot of the guidance you see is very misleading, because they make it sound, oh yeah, just go buy, spend 80 grand to install a swimming pool and write the whole thing off. Well, no. First, it's got to qualify as a legit medical expense. And then two, you're only deducting, you're writing off the amount to the extent it exceeds the increase in the value of your home. So if you spend 80 grand and the value of your home goes up 79,000, you got a $1,000 tax write-off for medical expense, not an $80,000 write-off. So let's look at our pool example here on the next slide. Okay, so here's our pool example. We've got two with varying numbers, but same fact pattern for the most part. So we have John here. He's a taxpayer. He visits his doctor, and the doctor prescribed swimming for rehab of his knee and hip replacements, right? So John's had a lot of work done, knee and hip replacements, and swimming is top of the list for the rehab. So John has a builder install an in-ground pool at his personal residence, and it costs 40 grand to install the pool. Now, the fair value of John's house before the install was $325,000. After the pool was installed, he had a property appraiser come in, and they valued the property at $351,000. So there was a $26,000 increase in the value of the home after the pool was installed. So now you can see the numbers here. It cost us $40K to install, but the overall value of our home only went up $26,000. And that's not uncommon, right? I mean, a lot of real estate experts and property appraisers would tell you, yeah, the value of your home is going to go up maybe 5 to 8% of whatever the initial value was, but you very often don't get a dollar for dollar increase, okay? So what can John claim? Well, John might be able to claim as a medical expense the $14,000. So the difference between the costs over the increase in fair value is $14K. So that's the medical expense deduction, assuming the primary purpose of the medical or the pool was for medical reasons, and he followed all the other rules, right? Now let's look at example 2. John visits his doctor. You have the same reason, going to get a swimming pool for rehab of his hip and knee replacements. Now he hires a different builder that comes in at a much cheaper price, right? So this builder in this fact pattern installed the pool for $22,000. Now, the fair value of John's house before the install was $325, and again, an appraiser comes in and is hired to review the increase in fair value of the property, and they've determined that the increase was $25,000. So it went from $325 to $350, so a $25,000 increase. Now look at the numbers here. We had a cost basis of $22,000 and an increase in the fair value of the property by $25,000. So the fair value increase was more than the cost to install the pool. Under this fact pattern, John would not get any medical expense deduction, right? Because the increase in the fair value, $25,000, exceeds the cost to install the pool, right? You can only deduct the reverse, right? So if the cost was more than the increase in the value, you can deduct that different component, the difference there. But if you're in this position, like John should be happy about this overall, right? The value of his home went up more than dollar for dollar for the cost to install the swimming pool. But under this fact pattern, no deduction, right? So he doesn't get to write off $22,000, the cost of the pool. He doesn't get to write off the increase. There's no difference there. Literally nothing is written off for medical care related to this capital improvement. Okay, so that covers it for this video. I hope that was helpful. Again, if you have any questions, please leave me a comment below. I try to answer as many as I can. And I look forward to seeing you again on the next video.